You're watching Silver News Daily. Subscribe for more.
Did you know that silver is positioned to break all-time price records in 2024? That's right. Industry insiders like Durrett are sounding the alarm, and the reasons might shock you. From tightening global supply chains to unprecedented demand in renewable energy, the forces pushing silver higher are more powerful than ever. And if you think this is just another investment hype, think again, because the data we're about to share will leave you questioning why you haven't already secured your stake in this soaring market. Stick around because you won't want to miss what's coming next.
The outcome. So, Biden got 81 million votes in 2020. Plus, we had about 10 million immigrants come over the border. So I thought maybe he'd get, 2 million of those. I thought she would easily get 80 million votes. That was my expectation. And Trump, I thought it was going to be difficult for him to overcome that. Trump got about 74 million. So all she had to do was match Biden and she would have won, but she didn't. She didn't even come close. She got 69 million votes, which was 3 million more than Hillary got 2016, but 11 million less than Biden. Where did those 11 million voters go plus the immigrants? It's like she got 0 immigrant votes and she lost 11 million Americans. It's weird. So it surprised me. I thought it was going to be a very close race, but I was expecting Harris to win. I thought history was going to repeat. It didn't. Now let's talk about how the markets reacted very positively. And the reason why is because Trump is not going to raise taxes. He's going to cut taxes, especially if he controls the House. If he controls the House, he's definitely going to cut. So he's going to basically support the economy as well as he can. And so stock market's at all-time highs today. It traded at over 6,000 for the first time on the S&P. It traded over 44,000 for the first time on Dow. So we're hitting, the stock market is super excited about, Trump with his pro-business policies coming in, but that creates a lot of confusion for people who follow me for gold and silver. It's like, okay, now what does this mean for gold and silver? Does it mean that, gold is going silver and the miners are going to crash because the economy gets back on its feet? I don't think so. I said I was going to be bullish gold no matter who won, and I'm remain that way. I think that gold will go over $3,000 next year.
Silver prices are catching the attention of investors everywhere, and for good reason. After years of volatility, we're seeing signs of a potential breakout. Just recently, silver prices stabilized around $30.30 per ounce, even after a strengthening U.S. dollar applied significant pressure. Historically, a strong dollar suppresses precious metal prices, but this time, something unusual is brewing in the markets. The latest U.S. Producer Price Index data revealed rising inflation, which many analysts believe could act as a tailwind for silver. Inflation isn't just about higher costs. It often leads investors to seek safe haven assets, and silver has long held its place as a reliable store of value. But it doesn't end there. Unlike gold, silver plays a dual role in the economy. It's not only a hedge against economic uncertainty, but also a critical industrial metal. With demand for technologies like solar panels and electric vehicles soaring, silver is increasingly indispensable. This unique positioning is what's driving bullish sentiment among experts like Durrett. So here's the real question. Are we witnessing the early signs of a silver rally that could reshape the market in 2024? And if so, what are the underlying forces driving this momentum? Keep watching as we dive deeper into this fascinating story.
I do not think that gold's going down. We probably will get a 10% correction at some point, but I see this actually as kind of a blessing for gold and silver investors because everybody was saying that silver was going to break out above 35. A lot of the TA guys said silver's going to break out above 35, and I said not so fast, because in order for silver to get above 35, in my opinion, you're going to need the stock market to roll over. Silver's not going. I just didn't think silver was going to rip because if it gets silver gets above 35, it's pretty much going to go to 50 because there's very little resistance above 35 if you look at the chart, especially if you get above 36. And so I just didn't see silver ripping to 50 without a decoupling where gold starts outperforming the stock market. And gold did outperform the stock market in September. So somebody were thinking, okay, we're off to the races, but we didn't actually see it culminate. In fact, gold did not outperform the stock market in October, and it's clearly not outdoing it in November. So we're kind of back behind the eight ball here, which I think is an opportunity because when gold and silver finally do break out, it's going to be too late to own these miners. So for me, I want to accumulate as many miners as I can get my hands on before we get above, say, 35 on silver and then 350 on the HUI, the miners index. 350 HUI is kind of a line in the sand for me. If we get above 350 on the HUI, I'm going to stop buying. I won't buy any miners above that level. And my feeling is once we get above that level, we won't come down for 3+ years. I think once we get above 350 on the HUI, we're at 310 today. And so once we get above it, and so now, what does Trump mean? How long are we going to have to?
Silver's story is deeply tied to history, and its performance during times of economic and political turmoil is nothing short of remarkable. Let's take a step back to look at the patterns. During the 2008 global financial crisis, silver prices skyrocketed by over 400%, driven by a rush to secure safe haven assets. Fast forward to the COVID-19 pandemic, and silver again proved its resilience, climbing from just $12 an ounce in March 2020 to over $30 by August of the same year. But this isn't just a story of past trends. The market conditions we're seeing today, ballooning global debt, persistent inflation, and increasing geopolitical tensions, mirror those previous crisis periods. Historically, when uncertainty takes hold, silver becomes a go-to asset for investors seeking both protection and growth. Its dual identity as a hedge and industrial metal gives it an edge that few other investments can match. Even more intriguing is silver's tendency to outperform gold during bull markets. As gold climbs, silver often follows with amplified gains, a trend analysts refer to as the silver lag. But once silver catches up, its explosive growth can leave gold in the dust. The question is, are we about to see history repeat itself? If the patterns hold, 2024 could be the year that silver shatters expectations once again. And here's the kicker. What lessons can we draw from silver's past to prepare for its future? Stick around as we break down the forces shaping what could be a historic rally.
So it's basically a two-edged sword here on what they can do to restart it. It's very similar to what happened in Japan when they had their bubble pop in '89. They literally could not restart their economy for the whole decade. They had that lost decade. I feel that that's kind of what's coming our way here. And I think the optimism is really misplaced with this optimism with the stock market at 6,000. For instance, the PE right now is, 21, 22, forward, if you look into next year. And that's all based on the economy not getting worse, right? And even if the economy doesn't get worse, that's still a very high multiple. And so, we're kind of going into a storm here, and everybody's very optimistic that everything's fine. And we have I think, a very overpriced stock market based on where we're heading. And we have an inflation problem, we have a debt problem, we have a consumer spending problem, we have a bank problem. We have a lot of problems, but yet the stock market's at an all-time high. And if you listen to Wall Street, everything's fine. But the problem is that the people on Wall Street, they only care about the current month, really the current month and the current week. They really don't look out more than that. It's like, what's happening this month, and will it carry over into the next month? That is as far out as they look. They don't look any further than that. And so they live in a bit of a bubble, and they don't really look at these underlying issues, how they could bite us. Jeffrey Gundlach's probably one of the few people that does, but he's not expecting a recession, which is odd. I mean, even he's not expecting a recession. He thinks that Trump's going to be able to avoid one. Um, but I don't.
One of the most significant forces driving silver's potential rally in 2024 is the tightening of global supply. The Silver Institute recently forecasted a 4% decrease in the silver deficit for next year. But don't let that fool you. This isn't due to a sudden surge in mining production. In fact, the deficit is only shrinking because of increased recycling efforts, particularly in Western silverware scrap. The underlying issue remains. Global mining output simply isn't keeping pace with soaring demand. Here's the problem. Over the past 4 years, industrial demand has steadily outstripped silver production, leading to a growing reliance on stockpiles. These reserves are finite, and as they dwindle, the market faces a critical supply crunch. Experts warn that by the end of this decade, industrial demand alone, driven by sectors like renewable energy and electronics, could consume nearly all available silver production and recycling output. That leaves little to no room for investment-grade silver or jewelry production. This scarcity is already putting upward pressure on prices, and the trend is expected to accelerate. So what does this mean for investors? Simple. Supply constraints are laying the groundwork for a silver market explosion. With dwindling reserves and rising industrial needs, it's a matter of when, not if prices start climbing. The big question is, how severe will this supply shortage become? And could it lead to an unprecedented silver rally? Stick with us as we explore the broader economic and geopolitical factors that could amplify this trend.
I think part of it has to do with the honeymoon period. So you basically give Trump the benefit of the doubt. We don't know exactly what his policies are going to be. So we give him the benefit of the doubt that he's going to be able to basically figure this out. So you have the combination of a Fed that's cutting rates, that's supportive for Trump, and an administration that's pro-business. So it's kind of the honeymoon period where we basically say, okay, well, we'll let you fix this. We're going to believe you can do it. And it's that feel good. It's the feel good period. So I think we're in the feel good period right now. And I don't know how long it'll last. We'll see if it lasts all the way till January. If it lasts all the way till January, then it could all last all the way through the first quarter. But yeah, I think that's what it really amounts to, is this idea that the Fed's lowering rates, and you got an administration that's coming in that's going to cut rates, cut income tax rates, cut corporate rates, and is going to do supportive economic policy. There was already a belief that the Fed could avoid a recession. Wall Street believed that we were not going to get a recession. Now, I think all of this optimism is misplaced, because I think the U.S. economy and the U.S. fiscal situation is dire, and nobody's really acknowledging the direness of the situation. I really feel that the next 3 years, 25, 26, and 27, I believe that these next 3 years are going to be the equivalent of 78, 79, 80. Just brutal. Stagflation. You can't get a job. No, GDP's negative. Malaise. I don't know when the shoe's going to drop here, but I really feel that we are literally on the precipice of the worst recession that we've had since the late 70s. We haven't really had a bad one since then, but this one's going to be, I feel that this one's going to be really, really nasty because of the debt situation and the difficulty on getting this economy back on its feet once we go down, because the only way that the Fed is really going to be able to get this economy going again is to create inflation. And
The US dollar, often seen as the silver market's greatest adversary, has been unusually strong in recent months, buoyed by hawkish signals from the Federal Reserve and rising interest rates. Typically, a robust dollar means trouble for precious metals, as it makes them more expensive for holders of other currencies. Yet, despite the dollar's dominance, silver prices have remained surprisingly resilient. Why? Experts believe this could signal a shift in the traditional relationship between the dollar and precious metals. Inflationary pressures, fueled by rising federal deficits and aggressive monetary policies, are eroding trust in fiat currencies. This distrust drives investors toward tangible assets like silver, which cannot be debased by central banks. In other words, even a strong dollar isn't enough to keep silver prices down when confidence in the broader financial system is wavering. Adding another layer to this dynamic is the increasing use of silver as a hedge against inflation. While gold has traditionally been the go-to asset in such scenarios, silver offers a more affordable alternative with the potential for greater percentage gains. As inflation eats away at purchasing power, more investors are recognizing silver's value, not just as a hedge, but as a growth opportunity. So, could we be witnessing a rare moment when silver defies the dollar and carves its own path higher? And if the dollar weakens in 2024, what kind of boost could silver receive? Stay tuned as we unravel how industrial demand is further bolstering silver's case as the breakout asset of the year.
so right there. So if he's going to cut that other 40%, even if he cut 10% of that, it's not really going to have a big effect. In fact, it's going to have a negative effect in the short term because it's going to slow GDP. And they're going to be really cognizant of the fact that the economy at that time is probably going to be hanging on by a thread. We're probably going to have GDP less than 1%, somewhere in there. And you don't want to be messing with that because then you can slip into a recession. So it's going to be tough for Elon to do this. Basically what's happened is debt has gotten out of control. We should have never allowed the deficit to get above $1 trillion. We should have never done that. And once it got to 2 trillion, now you have a huge mess on your hand, because how in the world do you shrink that back to 1 trillion? How do you shrink those interest payments back down? Here's another thing that's really interesting here is, okay, so we're currently having we're paying interest on this massive debt load, right? Well, guess what? We're going to be adding to the debt load. It's right, like we're adding $2 trillion to it. We're 36, we're going to go to 38. Well, the larger your balance gets, the more interest you have to pay on it. So we're not hitting the principal. We're not even he's just cutting the deficit. He's not cutting the principal. You see the problem? It's when it gets that massive, there's really nothing you can do. I don't know. I personally feel that the U.S. government is basically bankrupt right here, and the only thing that they can do is try to kick the can as far down the road as they can before they have to default. Now, the key here is, and the default, in my opinion, is going to be a reset. And what the reset, I think, is going to be, there's lots of different ways they're going to do it, but the bottom line is they're going to have to default on a portion of the debt. They won't default the whole thing, but they'll basically make the bondholders take a haircut. It's going to be really, I think it's going to happen in 27. I'm just guessing, but I'll give Trump 3 years to try to avoid it. But at a certain point, I think they're going to have to do a reset of some type. My feeling is that they're going to they're going to create a new currency. This is where the CBDC comes in. They're going to do away with the current dollars in the United States. The current existing foreign dollars internationally, those will stay in play, but they won't be able to come back in. They'll be orphaned. and then they'll create a new dollar internally in the United States. That's what I'm expecting them to do. And then they'll make the bondholders take a haircut because they basically can't pay them back. But it's going to be, the next 3 years are going to be really interesting. But I don't think that we can afford a default, can avoid a default or avoid some type of a reset. So I'm expecting a new currency to be released this decade, and my target is 27.
Silver's unique position as both a precious metal and an industrial workhorse is one of the most compelling reasons behind its bullish outlook. In 2024, industrial demand for silver is expected to hit new highs, driven by a wave of technological advancements and a global push for sustainability. From solar panels to electric vehicles, silver's versatility makes it indispensable in the modern economy. Let's start with renewable energy. Solar panels are among the largest consumers of silver, and with governments worldwide committing to ambitious net zero carbon goals, demand for solar energy is skyrocketing. Analysts project that silver usage in photovoltaic cells alone will increase by nearly 30% over the next 5 years. That's a massive shift that could tighten the supply even further. But it doesn't stop there. Electric vehicles, which are becoming more mainstream every year, require significant amounts of silver for their batteries, circuit boards, and charging stations. As EV production scales up globally, the demand for silver in this sector is poised to surge. Add in its role in medical technologies, water purification systems, and electronics, and it becomes clear that silver isn't just a safe haven asset, it's a cornerstone of innovation. The question investors are asking is this: how long can the market sustain such high demand without running into severe shortages? And what happens to prices when industrial needs start outpacing supply at an even greater rate? Stick with us because the answer might just redefine how you view silver as an investment opportunity.
Yeah, the problem with cutting spending is when the deficit is so massive that if you cut it at the margin, it really doesn't do any good, and it actually will do more damage than good, because he will end up cutting government workers. And I'm almost sure, I think that is exactly, where he thinks the waste is, the main place where the waste is. So if he cuts a lot of government workers, that's been, somewhat of a strength of the economy, because the main places that we've been adding jobs is government workers. So now all of a sudden, instead of adding, we're going to lose them. So if the economy is slowing, for instance, non-farm payrolls last month was 12,000 jobs, and if it doesn't perk up a little bit here, and I don't think it will, and then he decides he's going to cut on top of it, that's difficult because now he's slowing the economy even further. And then if you have a $2.4 trillion deficit and you only cut 400 billion, that 400 billion, I'm telling you, is going to have a big impact on GDP and the economy, because government spending adds to GDP. So, but if you go from 2.4, because here's an important one, Elijah, they cannot cut interest. So interest is already 1.1 trillion next year, 1.2, because prior to inflation, our interest rate was about 3%, because we had all these very low rates, right? 1% or less. We're at 3%. Well, today we're at 4%, but the Fed funds rate is at 4.5. So that means that everything that they're borrowing this year will be well above that 3% rate. So they can't cut interest this year, and maybe not in 25, maybe in 26, but not in 25. So he can't cut that. Defense spending will be very difficult to cut significantly. In fact, I don't think that Trump is really going to want to cut defense. It may be 5% in defense, but that's nothing, right? And then you have Medicare and Social Security. He doesn't really want to cut those. And so when you add those up, those are 60% of the budget.
Silver's rise isn't just about economics. It's also a reflection of an increasingly unstable geopolitical landscape. In 2024, global tensions are running high, and they're driving investors towards safe haven assets like precious metals. But silver stands out as uniquely positioned to benefit from these dynamics. Take the ongoing U.S.-China trade dispute. The Trump administration's renewed push for tariffs and economic decoupling has created uncertainty across global markets. These tensions have a ripple effect, slowing industrial production in some areas while simultaneously increasing demand for silver in strategic sectors like semiconductors and electronics. The metal's critical role in high-tech manufacturing ensures it remains in the spotlight as trade frictions escalate. Meanwhile, in the Middle East, escalating conflicts are stoking fears of broader regional instability. Historically, geopolitical crises have driven up demand for safe haven assets, and silver is no exception. Unlike gold, silver's affordability makes it an accessible choice for investors looking to hedge against volatility without overstretching their portfolios. Closer to home, political changes in the United States, especially under a Trump-led administration, are expected to influence inflation, interest rates, and fiscal policy. These shifts could have far-reaching implications for the dollar, trade relationships, and ultimately silver prices. The question now is how much of an impact will these geopolitical events have on silver's trajectory, and could 2024 be the year these forces finally converge to push silver into uncharted territory? Stick with us as we explore the growing momentum behind investment trends in precious metals.
Real wages, I saw a chart where they're basically flat since 2020, real wage growth. So people are getting 3-4% increases, but they're just they're not being able to catch up. And and so that's a problem for Trump because 70% of the economy is spending. So how does he fix that consumer problem? So you have a problem in banking where banks are seeing delinquencies in car loans, in credit card debt. They're seeing delinquencies in real estate, in commercial real estate in a big way. So banks are kind of behind the eight ball here. But the investment banks are making money. The banks are regional banks are having trouble. Banks on Wall Street are doing great, but not so much the regional banks where your small businesses try to get loans and the consumers try to get loans. That's not doing well. Then if you look at housing, long-term rates actually went up. The Fed, this is a problem for Trump, the long end of the bond market. And the Fed cut 25 basis points yesterday, and they've cut 75 basis points, and the long-term rates went up. And so that's a problem. Nobody expected that. And so the dollar has went up. It's almost 105. We traded at 105 today, and it backed off to 104.8, but it's basically at 105. That's a problem. The dollar is too strong. Trump wants to get that. He wants a weaker dollar so we can export stuff, make money. And so he wants to get that down to like 100, but that's not going to be easy to do. So there's all these headwinds that Trump has to deal with. So we don't know there's a lot of uncertainty here, but I still am expecting a recession, a hard landing. I just think that Trump has too many problems. It won't be easy for him to fix these problems because inflation, it doesn't go away. If you remember when Reagan came into office in 1980, it took him 2 years to get the economy going. And so just because you have policies that you want to implement, they don't just kick into gear overnight. And I actually think that we're going to roll into a fresh recession in first or second quarter before Trump really can do anything to stop it. I'll stop there.
Silver is rapidly emerging as the darling of both institutional and retail investors, and it's not hard to see why. In 2024, the metal is attracting unprecedented interest as a versatile asset with the potential for significant returns. But what's fueling this growing wave of investment, and what does it mean for prices in the months ahead? Let's start with the big players. Hedge funds and institutional investors are increasingly taking long positions in silver, seeing it as both a hedge against inflation and a way to capitalize on industrial demand. Some of the world's largest financial institutions, including firms like BlackRock, have added silver to their portfolios, a clear signal that they see major upside potential. Meanwhile, central banks in emerging markets are bolstering their reserves with silver, further tightening global supply. Retail investors are also jumping on board, with demand for silver coins and bars surging to levels not seen in years. With gold prices soaring, many smaller investors are turning to silver as a more affordable alternative, lured by its dual role as a safe haven asset and a key industrial material. The rise of online trading platforms has made it easier than ever for individuals to buy silver, further fueling demand. The key question is this: with both institutional and retail demand on the rise, how will the market respond to this increased pressure? Could this influx of investment accelerate the already tightening supply-demand dynamic? Stick around as we examine how macroeconomic policies under the Trump administration could amplify this trend even further.
Wait before silver gets above 35. I do not think we'll get above 35 this year. I think Trump is going to kind of put the kibosh on silver and gold here for the next 2 months as the markets wait to see what Trump is going to do, and then how the economy reacts to his policies. So we're in gold and silver, we're kind of in wait mode. And people, investors hate that. I don't mind. I think it's a blessing because I'm in buy mode now, but most investors hate it because they're not patient. They just want the market to trend up, right? They hate it. And then they hate the possibility that silver or gold are going to go lower. They don't recognize that if silver and gold goes lower, you have an opportunity to buy stocks on sale. That's opportunity. It's not a bad thing. I've been doing this for so long that I don't worry about corrections. I see corrections as opportunities, but I don't see a breakout above silver 35 this year. I don't see gold going to 2,800. Now gold maybe could get to 2,800. That wouldn't shock me, but I don't, especially in December, because the debt problem hasn't gone away. So we had a $1.9 trillion interest payment. I mean, excuse me, a $1.9 trillion deficit in fiscal 24 for the government. 1.9, and interest was over $1 trillion. That's a problem. In 2025, now we have Biden's budget coming up. You know, Trump won't get to put his budget in for quite a while. Because it starts in October, the budget. So Biden's budget goes all the way until next October. Trump will be able to make some changes, of course, but most of that spending is kind of set in motion before Trump gets into office. So the deficit is going to be above $2 trillion next year. And I think it's going to be 2.4. So that's $200 billion every single month the Treasury has to borrow. The Treasury is going to borrow. These are crazy numbers. I mean, historically, we've never been close to this. In the first quarter of next year, the Treasury is going to borrow $800 billion in a quarter. That's almost $300 billion every month. It's going to put pressure on the bond market, which is going to help put a floor under gold. And the other main point I wanted to make is around the economy, about how difficult it's going to be for Trump to kind of land this plane and get a soft landing. Trump has to deal with the cost of living has outstripped real wages. So the average family cannot pay their bills because their wages have not stayed up, have not kept pace with inflation. And so
with Donald Trump back in the Oval Office, the economic policies of his administration are set to ripple across markets, and the silver market is no exception. Trump's approach to fiscal policy, marked by tax cuts, increased tariffs, and significant government spending, could be a game changer for precious metals. But what exactly does this mean for silver prices in 2024? Let's break it down. Trump's policies are expected to expand the national deficit and fuel inflation. Historically, when inflation spikes, precious metals like silver become the go-to investment for preserving wealth. Inflation eats away at the value of cash, but silver holds its ground, making it a safe haven for both institutional and retail investors. Then there's trade policy. Trump's hardline stance on tariffs, particularly against China, creates uncertainty in global markets. This uncertainty often leads to higher demand for tangible assets like silver, which can serve as a hedge against volatility. At the same time, his administration's focus on boosting domestic manufacturing can amplify silver's industrial demand, particularly in sectors like renewable energy and technology. Finally, Trump's tax policies, which favor corporate growth, could indirectly benefit silver. Lower corporate taxes mean more investment in industries that rely heavily on silver, such as solar panel production and electric vehicle manufacturing. The big question is this: how will Trump's return to power shape the silver market? Could these policies provide the spark that pushes silver prices to record-breaking highs? Stick around because we're about to explore the expert predictions for silver's future trajectory in our next section.
America. So they call it the global South. Well, as these countries create this economic alliance, that's very negative for the US. And that's something Trump has to deal with. And I actually think that it's kind of the US's Achilles heel. There, and the reason why I say that is that the US is being kind of forced out of the global community to a certain extent. And at a time when the US this is when the US dollar, slowly and steadily goes down in value as countries don't want to carry as many reserves and no longer buy our bonds. And so who's going to buy them? For instance, foreign ownership of bonds right now has dropped all the way to 22%. It was 30% just a couple of years ago. It's dropped to 22%. They're no longer buying our bonds. That's a big problem. So that means we have to buy 78% of them, or it's like, uh-oh, that's a problem. When you're borrowing $200 billion, when the US government is borrowing $200 billion every single month, where are you going to find those buyers? And so that's a problem. So I don't think the BRICS problem is going away. I think it's going to increase. And the thing that's really nasty about it is that Russia and China have created an alliance, and they've gotten India to join them, and they've gotten, some of these Middle Eastern countries to join them, and that's problematic.
All signs point to 2024 being a transformative year for silver prices, with many experts forecasting record-breaking highs. Durrett, a prominent voice in the precious metal space, predicts silver could soar past $35 per ounce, potentially breaking through resistance levels and entering a new era of price discovery. But what's fueling these bold predictions? One key driver is the sustained global deficit in silver supply. As industrial demand accelerates and recycling efforts struggle to keep up, market dynamics are creating a perfect storm for higher prices. Analysts agree that the supply-demand imbalance will only worsen as renewable energy initiatives and advanced technologies continue to grow. Technical indicators also paint a promising picture. Silver has broken through multiple resistance levels over the past year, and if it surpasses $35, many believe it could climb to $50 or even higher. Historical patterns show that once silver begins a bull run, its gains can outpace even the most optimistic expectations. Adding to this momentum are macroeconomic factors, including inflationary pressures, geopolitical instability, and an uncertain dollar. These forces, combined with Trump's fiscal policies and rising industrial needs, make a compelling case for silver as the breakout asset of the year. So, will 2024 be the year silver finally reaches its long-anticipated potential? And what opportunities does this create for savvy investors? Stay with us because the next step ties everything together in a conclusion you won't want to miss.
It's good for business, and it's probably going to put downward pressure on oil. It's going to, more drilling, more oil supply. But now, if we look geopolitically, the BRICS has really expanded since Trump left office, 2020. And the BRICS is expanding all the time. And this is a problem for Trump. I think that Trump is actually going to spend more time on international politics because of the BRICS than he would want to. I think he wants to focus domestically, but the BRICS is going to cause a big headache for him because the BRICS want to do trade within themselves and they want to exclude the US, they want to exclude dollars, they want to hurt, they actually want to have like an economic war against the US, and Trump's going to have to deal with that. I think he's going to have a lot more meetings around what the BRICS are doing and how to combat it than he really wants to do. I think the BRICS is a big problem because the BRICS is so big. I mean, you're talking about, a lot of the big countries in Asia, China, India, Pakistan, Vietnam, Indonesia. Um, these countries, they're big. The only one that South Korea and Japan, they're not part of it yet, but I wouldn't be surprised if they try to get in there. But a lot of big countries in Asia, and then that expands to the Middle East, Turkey and Iran, Saudi Arabia. Um, and then you have, I don't think Saudi Arabia has joined. They haven't joined yet. They were supposed to, but I'm pretty sure Turkey and Iran. Then you have all of Africa and you have all of South America, and then possibly Mexico, in Central America.
Timing is everything in the silver market, and 2024 could be the most pivotal year we've seen in decades. The factors converging right now: global supply constraints, booming industrial demand, and inflationary pressures are setting the stage for what could be a historic rally. But here's the catch. Those who wait too long may miss the opportunity to secure their position before prices skyrocket. Silver is unique. It's not just a safe haven asset. It's a key driver of technological and industrial innovation. From solar panels powering the green energy revolution to electric vehicles, leading the charge into a sustainable future, silver is at the heart of it all. And as Don Durrett and other experts have noted, the current supply deficits mean the clock is ticking. Once prices break through critical resistance levels, the potential for exponential growth becomes a very real possibility. But let's not forget the broader picture. With Donald Trump's presidency adding new layers of economic and geopolitical uncertainty, silver's dual role as a hedge and industrial metal makes it a must-watch asset in the coming months. Investors, institutions, and even central banks are positioning themselves to take advantage of what's unfolding. So, why does this matter right now? Because the window to act is closing. Will you be prepared when silver prices surge, or will you be left wondering what could have been? Keep watching, because we're about to tie all these elements together into a conclusion that will change how you think about silver in 2024.
Geopolitical issues that are helping gold really doesn't have anything to do with these wars, I don't believe. I think it's more economics. Whereas I suppose these wars in Israel and Ukraine are hurting the global economy to a certain extent, but not that much. It's more the oil trade, but they've actually been supporting the oil trade, keeping the oil price up. I think that Trump actually, this is actually one of the factors that's actually pushing gold down, is the fact that I think Trump will end both these wars, and I think he will bring in an era of peace here, era of less conflict. I mean, that's Trump showed that in the first 4 years. He's not His whole focus on international policy is to avoid conflict and basically get other countries to do free trade with us. He's a free trade guy, and so he wants to do that. He wants to focus on trade, not on war. He's not a neocon at all, and I hope he doesn't bring any neocons into his administration. But I heard that the person who's head of his transition team is a neocon. I was like, what the heck? I think his name was Wiley. I'm not sure. But yeah, don't no neocons. Let's go for peace. I think Trump will end these wars, and I think he will bring usher in peace. And I think that will put downward pressure on oil, which helps the economy. And I think that is helping the stock market. Is the stock market's going, this is great. A peaceful world.
All roads lead to one conclusion. 2024 is shaping up to be a record-breaking year for silver. As Durrett and other leading experts have outlined, the confluence of rising industrial demand, tightening supply chains, geopolitical turbulence, and inflationary pressures is setting the stage for an unprecedented rally. Silver is no longer just a commodity. It's becoming a cornerstone of the global economy. Let's connect the dots. The supply deficit is widening, fueled by surging demand in industries like renewable energy and electric vehicles. Inflation is eroding the value of traditional currencies, pushing investors toward tangible assets like silver. And on top of that, the return of Trump's administration is creating economic and market conditions that historically favor precious metals. All these factors point to one undeniable truth: silver is poised for explosive growth. But what does this mean for you? If you're an investor, this is a wake-up call. Silver isn't just an opportunity. It's a potential game changer for your portfolio. As we've seen time and time again, when silver moves, it moves fast. Waiting on the sidelines could mean missing out on one of the most significant wealth-building moments of the decade. So, are you ready to take action? Don't let this opportunity slip by. And before you go, remember to subscribe for more insights into the precious metals market and beyond. Let's navigate these exciting times together. As always, this is not financial advice. Consult with a licensed professional for your investment decisions. Thanks for watching, and we'll see you next time.